I'm glad that you brought up valuation because that's the number one thing that people who are bearish in the market, that's what they're talking about. The market is just too expensive relative to where it trades historically. What do you say to that?
Yeah, again, I mean, historical, there's a lot of different contexts. And so we're kind of where we were, call it a year ago, where the broader market isn't expensive, but you got a handful of stocks that look very expensive and they completely dominate the index. So, I mean, if you've got, a 20-foot tall child in your classroom and, the marks are weighted by average or something like that, right? By height, right? Then you're going to have one child who dominates the average for the entire class. And that's where we were kind of a year ago. And so everyone go, if you look at the equal weight S&P or the 493 that aren't the Mag 7, it's kind of along historical averages. But the ones that are the big ones that maybe, and again, this is not, you brought up the 90s kind of thing, this is not 90s valuations, right? You can justify these prices based on decent growth rates if they're sustainable. So the valuations aren't out of control, but it's a small pocket that looks expensive. It's not the whole market that looks expensive.
But your child, Peter, is the 20-foot child in the class because you do traffic in these tech. Yeah. So on that, is that sector expensive? Let's use Magnificent Seven, but you can say, broader tech.
Yeah, and certainly there's times, again, we've never looked at the Mag 7 as one group, right? There's 7 different entities and some we really like and some we haven't liked. And it's always, there's a few ways to look at valuation, right? Compare it to average. So 15 times is considered the market average and something's at 20, well, therefore it must be expensive. But, Porsches cost more than Corollas because you're getting something very different. And so that's part of what is it different that you're getting? And then what is it you have to believe you're going to make money holding this stock at this point? And that's really then it comes down to the fund. What's the growth rate? Maybe 20 times is cheap. Amazon seemed expensive its entire life, right? Yet it's all-time highs kind of thing or near all-time highs, right? And so I think it's always making sure you're open-minded to what the future can be, mapping it. So saying this is what needs to happen for this to make sense as an investment today. And then does that happen? And that's kind of what we do all day.